afternoon. You're watching Businessworld Live. I'm Danie Laurel. Okay, guys, checking in on the equity markets. Let's kick off with a quick check on Asia. You're going to be seeing trade still going on, particularly in India and China, but most stocks in the region are falling. That's as China's lending outlook hurt the sentiment. The Chinese central bank asked the nation's major lenders to curtail loan growth for the rest of this year. That's according to people familiar with the matter, according to Bloomberg. Now, this even as Wall Street, which is still asleep at the moment, hit a record on Monday. U.S. data continued to highlight an economic pickup as more Americans are vaccinated against, of course, the coronavirus, and restrictions there have been rolled back. Fiscal relief is taking hold, but of course, analysts are saying that the recovery will be uneven worldwide. Nevertheless, some good news here. Our index did gain today. We were the best performer in Asia. We were up by 1.5% to 6590.11. This is, of course, on the back of some news this morning. Inflation in the month of March came in lower than expected. That came in at 4.5% year on year, whereas analysts had actually expected an uptick of 4.9%. Still, this is higher than the 2.4% target band of the BSP, but is still within the BSP's forecast range of 4.2 to 5% that month, and is still consistent with the view wherein they had said that inflation will be exceeding that target until 2020. Now, Governor Diokno of the central bank had commented after that print came out that this recent surge in the virus cases plus the vaccination challenges could actually offset those upward price pressures which we have seen were being caused by the local supply of our meat products and also the global economic activities. He has said time and again that the prevailing monetary policy settings remain appropriate. A quick check on our leaders and laggards here. Exciting times for URC. Take a look at that uptick. This just on one day, URC up by 5.6%, followed by Ayala Corp and ICTSI, but really a handful of gainers here reversing the losses. For instance, you've also got SM Prime. That was, of course, that's the biggest shopping mall operator, advancing by 1.5% after having slumped for 3 days straight. You still have some sitting out this rally. PLDT, our notable lockdown stock, so to speak, the worst performer today. That's down by close to 2%. Now, some earnings to be reporting here still as we take a look back at on 2020. This from Shakey's Pizza. Finally, net income posted in the fourth quarter, reversing the 2 quarters of losses that they were seeing. That was 250 million pesos worth of income. They said the system-wide sales for that period grew by 33% quarter on quarter because of the holiday season and more dine-in transactions. Still, if you take a look at the full year 2020, Shakey still incurred a net loss of close to 250 million pesos compared, of course, to the net income in 2019 of 865 million pesos. Of course, during the end of March last year, around 91% of their stores were closed. And if you take away the impact of the closed stores, the same store basis, excluding those, sales were still down by 30% year on year. Now, they're saying that this fourth quarter performance might actually spill over into 2021. So they're looking forward to store expansion. That was put on hold in 2020. They will be resuming this year, but with a new strategy. They're going to have smaller outlets to ensure a shorter payback period, and they will be rolling out ghost kitchens to boost their delivery profile. Now, another one that is expanding, you've got SMC. So San Miguel, they're allotting 4.6 billion pesos to be expanding SLEX from Batangas in the south all over to Quezon, and that amount would fund a construction of a 4-lane, 66.7 kilometer extension from Santo Tomas all the way to Lucena City. SMC closed up by 0.4% to 117 pesos and 50 centavos this Tuesday. Now, here are the other headlines we are keeping our eyes on. Filipino migrant workers deployed last year plunged to their lowest in 3 decades. That's as the pandemic lockdowns blocked them from seeking greener pastures abroad. The Philippine Star reports that some 550,000 OFWs were deployed last year. That's a 74.5% dive from 2019's record high of 2.16 million. This figure was the lowest since 1990, when only 446,000 Filipino workers flew abroad. However, the decrease in remittances have been minimal at 0.8%. That's despite the low deployment rates and the repatriation of over 300,000 OFWs. This, as the analysts say, those who opted to stay abroad have been using their savings to subsidize their families at home. This year, the central bank is aiming for a 4% growth in inflows. There is optimism that deployment is slowly picking up as most economies have reopened travel. Now, the customs exceeded its March collection target. This was attributed to the improved valuation of goods and better collection performance in the ports. The BOC's collection in March reached 54.5 billion pesos, surpassing its 47 billion peso target by over 14%. This figure was also higher than the actual collection of 44.6 billion pesos in the same month of last year. 13 of the 17 collection districts exceeded their targets in March. The agency's 3-month income reached 148 billion pesos, also surpassing the collection target of 134 billion pesos for the period. This year, the agency is implementing in full swing its customs processing system, a modernization project supported by the World Bank. This system seeks to streamline and rationalize the customs' processes and procedures and significantly reduce the face-to-face transactions. Now, Finance Chief Sonny Dominguez faced slower pace in economic growth. That's as tighter restrictions are imposed in Metro Manila and the nearby provinces. Dominguez spoke on Bloomberg Daybreak Asia and discussed the government's outlook and policies amid a spike in COVID-19 infections. Let's take a listen.
Well, I think it's going to be lower than what we expected. This surge in the contagion, which is incidentally happening in Brazil, Canada, France, and Turkey and other places, is certainly not good for the economy. However, we just want to emphasize that our death rate is much, much lower than other Western countries. We only have, I think, 12 deaths per 100,000, and other countries have over 150 deaths per 100,000. We are coping with this surge, and the best way we thought to do it was to have a curtailment of activities, especially in Metro Manila area, for at least 2 weeks.
Okay. Well, and I think that's very important to emphasize that the death rates are much lower than other parts of the world. But in terms of how you're going to manage this, aside from cutting corporate taxes, managing all the bad loans, what other steps can the government take to ensure adequate fiscal support for the economy?
Well, we, as I mentioned several times, our fiscal support, our support to the economy has come in 3 basic ways. Number one, last year, we granted our citizen, the poorest of our citizens, a cash handout of around $5 billion US dollars.
Okay.
And this year, we've done another one around 500 million US dollars for this 2-week lockdown. That's number one. Number two, the monetary authorities have made sure that the economy is flush with cash, so that the credit doesn't get locked down. They have injected a lot of cash into the economy by lowering our reserve requirements primarily. They have also advanced to the Philippine government around 10 billion, a little over 10 billion US dollars in a loan, which is of course used by us to cover our budget deficits.
All right.
And third, as you mentioned, we have recently passed legislation to lower corporate income taxes
Okay.
for large corporations by 5 percentage points,
All right.
from 30% to 25%, and for small corporations less than
Okay.
$100,000 from
Well,
30% to
okay.
20%.
Well, Secretary Dominguez, do you have any plans to tap the central bank, Bangko Sentral ng Pilipinas, for more loans this year?
We already have, as I said, over a little over 10 billion US dollars,
Okay.
and we
You're
have
gonna do
not
more of that? You're gonna
passed any plans to increase that amount.
You don't. Okay. Do you think you'll ask for an extension, or are you going to pay off that $540 billion dollar peso loan from the central bank?
We will probably look to wind it down sometime late this year or early next year, depending on the situation, of course.
Okay. Well, but I just want to come quickly back just to clarify something. Sounds like you're saying you get a little hit to the economic growth, but your growth target 6.5 to 7.5%. You don't think it's going to drop very much. How much do you think it might drop, or do you think it's negligible?
Well, for this lockdown, probably will cost us one half of 1%
Okay. Okay. Well, that
in growth. Yeah.
yeah. Well, in terms of more borrowing, any plans to to borrow in the U.S. dollar bond market?
Yes, we will tap the U.S. bond market before rates skyrocket. And incidentally, we just issued the first ever zero-rated samurai bond
And that was
last week
a,
of about 500 million US dollars.
that was certainly a big step. Are you concerned about how much debt is going to go up right now? I think a lot of countries are just saying we have to do this, but are you concerned that it could balloon? Do you think the government needs to set a cap on the borrowing?
Yes, we have set a cap, and our cap is 60% of GDP. Right now, we started out 2020 at 39.5% of GDP as our debt, and we have increased it to around 54% as of now. We have to keep in mind, of course, that the foreign reserves of the Philippines are already 110 billion US dollars, and that's actually higher than our total foreign debt.
Okay. Are you considering any new taxes in the Philippines to help pay for all this?
At this point in time, we don't have any plans to introduce new tax measures.
And those are the biggest news this trading day. Today is April 6, 2021. Catch Business World live for the market open tomorrow. That's at 9:30 a.m. and for the market close at 3:15 p.m. I'm Danie Laurel. Mask on, wash hands, and stay safe, Philippines. We are
Well, I think it's going to